Hello, how are you?
Hi, how are you doing?
Good.
All right. We just finished, for the plenary session, which is about.
I enjoyed hearing the last part of that.
All right. Well, it's fascinating discussion of the history of the Sino-American relations, something like that.
Yeah.
I'm really happy to see you again. For about a year's silence, because of the pandemic. So our focus is about the global economy. A lot of things happened, over the years. I think people are very concerned about the recovery of the global economy by looking at the policies, in both the United States and China, because we just heard that Biden administration going to, launch this very big stimulus package, to help the families in order to, encourage the family to spending more, so that could be, maintaining a little bit growth of the American economy. But I think we're going to begin by, briefing on the global economy for the year and perhaps, for the next decade. Do you want to move first?
Sure. Yeah. Are you gonna pose questions or?
Because, actually, the organizer reminded me, not simply asking questions, because this is not an interview, It's a kind of...
Got it, I understand. Yeah. Okay, I can do that. We can just begin, and I can say the last year has been very challenging, and the question is, where are we going from here? And I can just go right into that. That's fine.
Right. I think so for almost a decade, if you look at the global economy, I think most of the economists are very concerned about the, worsening deceleration of the productivity, as a phenomena, behind the global economy. And this is largely because of the super expansion of the banking credit, to stimulate aggregate demand in almost every country, especially after the breaking out of the financial crisis in the U.S. So the structural issue, including the income inequality, does not really improve. For every country is suffering from this structural issue, and as a common knowledge, I think people still are very much liking, putting more credit into the economy in hope for a modest recovery of the global economy. So given that slowing growth in productivity and widening income gap, facing almost every country today, how do you look at the growth prospect of the global economy? Especially after the pandemic, when almost every country now take a lot of measures to sustain the domestic economy by for creating even super size of the physical deficit and monetary expansion.
Yeah. So when do we start officially? Can you tell me? Have we already begun?
Yeah. Everybody's here. So you can't catch me?
Oh, when do we Oh, okay. Good. So let me just say, first, I'm very optimistic about the economic recovery in both the United States and China. The Fed has forecast a 6.5% growth
Yeah.
And Goldman Sachs, an 8% growth for 2021. And that will put the United States actually basically back where it would have been had it not been for the pandemic. Other countries, Europe, are not quite so strong. Latin America is weak, a lot of the emerging markets. One of the reasons why the United States has been so successful, hopefully it will be successful, is the strong fiscal stimulus.
Yeah.
And one of the reasons the rest of the world is a little weak is that they've not been able or willing to give the fiscal stimulus.
Yeah.
Stimulus in the United States has been, on a per capita basis, around $17,000.
Yeah.
And that compares with the average in the developing countries and emerging markets, about $17. In other words, the United States is 1,000 times larger.
Yeah.
So in that basic area, we are likely to be quite strong, and with China, provide a lot of growth impetus for the global economy. What is also very good about what is happening in the United States is, you might say, the quality of growth is going to be very positive. The stimulus was very well designed to target exactly the problem of inequality.
Yeah.
Childhood poverty will reduce by about 40% or more.
Yeah.
I mean, in 1 year, this is an amazing record. And going forward, the Biden administration is committed to really work on the environment. So in terms of both the quantity and the quality of growth, I'm very optimistic. Now, I'm also, you asked a question about the medium term, and politics is obviously very important in what's going to happen. If we're making projections for the next 10 years, very, very hard. But let me again be a little bit optimistic. I feel like we're at the end of the neoliberal era in the United States. We're in of an era where there was an excessive faith in markets alone. We're moving to a much more balanced perspective between the market, the state, the civil society. And what that means is we know the important role that government has for R&D. We saw that with the speed with which the innovations that had come from the government were translated by the private sector into discovering the vaccines. Really very impressive. But the internet is another example of government investment. So I'm very, very optimistic that there'll be a rebalancing and support for more government infrastructure, investments in R&D, a whole portfolio of government actions to address our inequality education. So if that happens, I'm quite optimistic that we're going to have quite strong growth. And many of these trends in the United States will be echoed in other countries. Now, the one difficulty is the subject of the previous session. Globalization is going to have a hard time.
Yes.
And the two dimensions of this, the discussion that you've just been through on the China-U.S. relation, but there's also a broader concern that the pandemic exposed the lack of resilience in the United States.
Yeah.
And in our private sector, we couldn't even produce face masks, protective gear, let alone more complicated products like tests and ventilators. So there's a sense of a need to rethink globalization, and that will likely have some profound effects. But on the positive side, the zero-sum mentality that marked Trump and the Trump administration is not part of the current Biden and current framework. We realize that you can have win-win growth, to put it the way some people put it in the previous session.
So really, I mean, for, you know, I think there's a lot of people really concerned right now. It's about the Sino-American relations because, you know, because the global economy needs both, you know, giant components, you know, to play equally in promoting the global trade investment. But, you know, we're now so confident about the, you know, the trade prospect investment as well, because a lot of barriers right now has been raising between the country, you know, and we, you know, we're not that pessimistic, for instance, in the long term, but in the short run, you know, for both countries, really have, you know, a lot more, you know, to solve, in overcoming the barriers and misunderstanding or something like that. So, what do you think that economists would like to play, you know, in the game of, you know, mutual understanding, so that we could bring, you know, a lot more benefits to both countries?
Well, at the end of the Cold War, 1989, 1990, Francis Fukuyama wrote a very influential book called The End of History, where it was a little bit Pollyannish, but his view was that we were all going to converge to liberal democracies and free market economies. And the view that was held for the last 30 years was that more globalization, more trade, interaction would accelerate that process. I think that there's been a rethinking in the West that's not likely to happen, at least not anytime soon. And that changes the way you think about globalization, because it was always partly economic, but also partly political. It changes it in a fundamental way because the rules of the game way it was designed back in, say, the Uruguay round that led to the WTO in 1995 was on a common understanding of, you might say, the underlying economics. And that was based on views about how markets work, sometimes called neoliberalism. And so today, neoliberalism is rejected by most economists, not all. So the underlying economic framework has been taken away from globalization and the rules of the game, and the underlying political motivation has been also altered. So we're in a new world now where we have to think about how do we create rules of the game that can foster the gains from trade, which still exist. There still are gains from trade, the principles of comparative advantage. There's still, or even more need for global cooperation to solve the problems of climate change or pandemics. So we now know much more than we did 30 years ago about the importance of global cooperation. And it is still the case that there's room for gains from trade, but the foundations of what those rules should be are much more complex than we assume they were. those were in the late 1980s.
Right. Okay, for talking about the stimulus, I think that when I reading the news every day here in China, I think this is a very frequent, conceptualization is about the inflation, because the people saw inflation is gone for a long time, but now it's going to come back. So for they're very worry a little bit about the the inflation is coming back in China.
I'm not worried. So let me say first, I think the Biden administration did exactly the right thing. It balanced the risk. Yeah. It concluded that the risk of doing too little was much worse than the risk of doing too much, and that the risk of inflation was very low. And the reason why, there are several reasons for not being worried about the risk of inflation. Mm-hmm. The first is we have a lot of underutilized capacity. Mm-hmm. Right. And the rest of the world has a lot of underutilized capacity. But equally important, should inflation raise its ugly head, we have tools. Yeah. We can raise interest rates, monetary policy. And today, we have ways of monitoring the level of inflation that are much better than we had 5 years ago, 10 years ago, because we have real-time data that we can scrape off the internet. We don't have to wait for the weeks that we used to have to wait. We get a really good indicator even before the BLS comes out with the preliminary inflation number. We can feel whether there's inflation. It would be good if we increased interest rates, I believe, because a world in which interest rates are zero is distorted. But no one really believes that the cost of capital should be zero. That's a real distortion. And we also know that when you have low interest rates, the price of risk gets distorted. And so capital markets get kinds of distortions. So, and the second thing is, it would be also good if we had the context of a strong economy. Yeah. It's only when we have a strong economy that we bring back into the labor market marginalized groups, like women and minority groups. And thirdly, we really need to re-examine our tax code. And in the United States, we need to raise taxes on corporations. We need to raise taxes on the very wealthy who've done so well in the pandemic and in the last decade. There's a little fear for doing that when the economy is weak. But if we're growing at 6% or 8%, and we see that there is some inflationary pressure, the way to respond is monetary policy raising interest rate and fiscal policy raising the taxes to get our tax structure back to a healthier tax structure. Our current tax structure is not a good one for our economy.
Right. So for before I taking questions from the audience, probably we could move to the last one, which is something to do with unemployment. Because we know that over the past 10 years, the unemployment rate in the U.S. Almost touched the bottom in the history. Even the growth, the productivity growth has not been growing that much. Okay, so what is going to happen to the unemployment rate? Do you think for the next decade or so, with the expansion of the aggregate demand and the government spending, they're going to create more jobs so that you're going to experience the unusual growth of employment, so that you could still keep historical low unemployment rate?
So first, let me say that the unemployment rate is probably not the best measure today of the tightness of the labor market.
Okay.
The ratio of employment to working age population has been not as good as it should be.
Yeah.
And that's the point, is we want to draw into the labor market women, minorities, groups that have been not inside the labor market. So we have some room, and I think it's more important to focus on the employment rate rather than the unemployment
rate. Yeah,
rate.
I agree. Yeah.
And the second thing I would say on the issue of productivity is I'm actually, again, optimistic, because if we invest more in infrastructure, if we invest more in R&D, technology, science, eventually, and education, eventually these measures, which you can think of as supply-side measures,
yes,
will show up in increased productivity. I believe in both demand and supply, and right now we need both. And a lot of people focus on the demand side of the Biden $1.9 trillion, but the next part is going to be more on the supply side.
Yes.
And there's an interesting contrast here. There are two kinds of supply side measures. One is what I think are the good ones, the investments in education, technology, R&D, and infrastructure. And the other one are the measures of tax cuts for billionaires and for corporations. And we saw what happened with that. We didn't get more investment. We didn't get more growth.
Yeah.
A little bit, but for a very short time. And so the real active supply side measures are the ones that hopefully will be undertaken in the next Biden package. And I think this will have a global impact for two reasons. One, in terms of the model of how you think about these things, that you need this balance between supply and demand, between government and the private sector. I think it's really important to the role of the United States in showing how to think about these problems. And then a stronger U.S. economy is going to help pull up the entire world and help us all get out of the pandemic and hopefully have a next decade that is much more robust.
Yeah. Maybe we could take some more questions before we conclude from the audience. Everybody, it's a good opportunity. Or we could put questions for Joe. Yeah. Yeah.
The U.S. 10-year Treasury yield volatile a lot. So what's your take on that? And the second question is about global economic recovery. People are quite worried about the K-shaped recovery. So how can we actually address this problem, the so-called unfair recovery? Any good suggestions from your side?
So did you take the point?
Yes, let me address both of those. I think there are two aspects of the K-shaped recovery. There's one within each country, the United States, the division between the poor and the rich, and the kind of measures that the Biden administration has undertaken with a recovery with a lot of money going to the bottom is the best way that you can address that K-shaped recovery, combined with a very strong macroeconomics because, as I said before, the one time in which you bring the marginalized groups into the labor market is when you have a strong recovery. But the contribution of reducing poverty among children by 40% in 1 year is truly impressive. There's another dimension of the K-shaped recovery that worries me is across countries. I mentioned before that the United States is spending so much more than developing countries and emerging markets, and so is having a strong recovery, and the rest of the world, the poorer countries, can't. And here there are two important measures. The first is the initiative at the IMF of the issuance of IMF money, global money, SDRs. $500 billion of SDRs, about equivalent to $650 billion, is absolutely essential. And it was vetoed by the Trump administration, but our Secretary of Treasury Yellen has now endorsed this measure. And there are important initiatives that I've been pushing to ensure that those countries that don't need their SDRs, because they're given the basis of the formula, could recycle theirs to those countries that do need it. And that would really help prevent the K-shaped recovery. The second issue that is related to the K-shape across countries is that several countries, a number, are facing a debt crisis. And every dollar they spend in servicing the debt is money that they can't spend to rejuvenate their economy. So it is important at this juncture to go well beyond the standstills that were talked about a year ago and to have deep debt restructuring and not go into the flaw that we've seen over and over again of too little, too late. It needs to be done quickly, and it needs to be done deeply. So those are the two measures, dealing with the debt and the SDRs, to prevent a global K-shaped recovery. On the issue of the yield curve, not a surprise that there's a little volatility in that. It reflects the fact that there's a lot of discussion, as we had just had a minute ago, on what is the inflation rate going to look like. And there's some uncertainty about that. But the thing I would emphasize is how little the yield curve has changed, not how much. There's been, yes, some volatility, but no one is expecting significant, really high increases in the inflation rate. And that, of course, is in that sense, good news. As I said before, a little higher inflation is fine, it's probably a good thing, and no one is expecting inflation that is what I would say putting us in a zone where there needs to be worry.
Thank you, Joe. We only have 1 more minute to go, and I don't think we should take any more questions. But I just hope that you could be, back to Beijing, for the time for this year, and hope to see you again, in either Shanghai or Beijing.
Me too. I'm looking forward to it.
Okay, thank you very much for taking your time, and we really enjoy.
Thank you.
Good night.
Good night.
Good night. Well, here is money. This is morning.
Good night.
Great. We probably should start. Welcome to join this dialogue. We already have our guest, Professor Jason Furman, as the key guest of this dialogue. I probably don't need a lot of introduction to Professor Furman, but I will just briefly say at the moment he is a professor of the practice of economic policy at the Kennedy School of Government and Economics Department at the Harvard University. And he was also the top economic advisor to President Obama. And he has lots of experience in the U.S. economic policy, but also global economic issues. So welcome also Jason to join this dialogue. The topic which was assigned to us is the next decade, U.S. economic growth. So we would like to ask you to share your insights about the outlook of the future. Before I start, just a quick reminder, this program is broadcasted on CGTN, and we also have a very tight time constraint. I was told literally within 28 minutes. So maybe I'll start with my first question, Jason. Well, we just had a change of the government in the U.S., and one of the things the Trump administration tried to do during the last 4 years was to bring a lot of American manufacturers from overseas back to the U.S. It looks like it was not a very successful action. Now, my question to you is, do you think that was the wrong policy goal to pursue, or that was the wrong strategy implemented? And also, if we're looking out at the next 10 years, what do you see the role of manufacturing industry in the U.S. economy?
Great. Well, Yiping, it's so great to be with you. I wish I was with you in person. It's wonderful to be following my friend and mentor, Joe Stiglitz. And hopefully I'm going to watch his face to make sure I'm not getting any of your answers wrong. A lot of agreement between politicians of both political parties, and economists don't agree with either, politicians from either party. Manufacturing is less than 10% of the economy. Manufacturing is going to shrink because people buy fewer manufactured goods. Productivity rises quickly in manufacturing, and more manufacturing goods can be imported. So I think the focus in the economy should be on the service sector. That's the higher wage, faster growth, more important source of jobs. That being said, I think President Biden will continue to focus on manufacturing. You'll see that in the tax code and other ways. I think sometimes the language is fine and a perfectly good way to do a decent policy. For example, investing more in infrastructure. I think in other places maybe we'll see some, special incentives in the tax code that economists won't love, but probably won't change very much anyway.
So related to that question, there's been lots of tension on the global supply chain that's related to manufacturing in the U.S. and the rest of the world. Should we expect, if that's the case, I'm not sure if this is also the view of the Biden administration, if they're easier on not necessarily moving all the manufacturers back to the U.S., should we expect the ease of the tension on relocation of the global supply chain, especially away from China?
Yeah. I mean, we had seen some reshoring of supply chains even before the Trump administration.
Right.
There was a craze for outsourcing, and then there became some concerns about difficulties communicating, other issues and the like. So I think the process of outsourcing and globalization of supply chains, I don't think that will continue, but I don't think you'll also see a big reversal and a collapse back. I think that's something that's difficult to accomplish. I also think, broadly speaking, supply chains held up pretty well over the last year. who could get most things in a timely manner amidst a really devastating pandemic. Very important exceptions, personal protective equipment and ventilators. But, by and large, I actually think the lesson of last year is supply chains worked and international diversification worked. And the vaccines we're making now are very intricate global supply chains that are functioning.
Right. To some extent, some people say last year was unusual because of the pandemic. So some of the expected changes probably did not happen. But I agree with you. There was a good reason why distribution of the global supply chain is like this, and it worked for quite a long time. The next question then related to this about manufacturing is the current account, the imbalance in the US. And I'm sure you're aware, the Trump administration made it a very big deal about the trade imbalances with China, the trade deficit issue. On the one hand, obviously, if you look at the goods trade, there are lots of imports into the US, not enough exports. So by definition, you saw a lot of very high trade deficit. But if your view is right, which I agree to, what would be the new position about the current account imbalance in the US? Should we expect the imbalances to continue to rise, or should we expect some further policy actions trying to reduce the imbalance?
Right. I think over the next year, you're almost certainly going to see the current account deficit widen in the United States. We're doing a huge fiscal stimulus. People are going to spend some of that money buying things from China, buying things from Europe, buying things from Japan. And so that will widen the U.S. current account deficit. I expect the U.S. recovery to be stronger than the recovery we see, at least in Europe. And that tends to mean that our current account deficit will go up. And that's a sign, in some ways, of strength. Over the medium term, if the current account deficit is where it's been, between 2 and 3% of GDP, I don't think that's a significant macroeconomic concern. I think it's even less of a concern when you realize that America's gross assets that we have overseas have a higher rate of return than foreign claims on the United States. When people put their money in the United States, they tend to put them in treasuries. They're getting basically a 0% rate of return on their money in the United States. The United States is getting a higher rate of return on its money abroad. So I think our current account balance is perfectly fine, perfectly sustainable. It's what you'd expect from the world's reserve currency. The Biden administration hasn't figured out their stance towards China economically. They have made it clear that they want to be more multilateral in their approach to China. If they want to be more multilateral in their approach to China, then they have to drop the concern about the bilateral trade deficit. We're not going to work with Japan to convince China to buy more Ford motor vehicles. We're not going to work with Germany to convince China to buy more Boeing jets. The bilateral deficit is not something that can be handled on a multilateral basis. So I would love to see us move away from that. I don't think the administration has sorted through their views yet.
Right. Well, I certainly agree with you, but that also has some implications on another very important issue, the future of the US dollar. As we heard before in international finance, there is one argument called the Triffin dilemma. I'm sure you heard before. If the US continues to run large current account deficit, it probably would lead to accumulation of the external debt. That is partly because the US also needed to supply the dollar to the international economy because the US dollar is the global reserve currency. But eventually, when you continue to accumulate the reserves and the debt, there could be a turning point, a triggering factor that make the international market a little bit worried about the value of the dollar. Do you think that's something we don't have to worry about anymore? or you think this might be an issue continue. One of the issues in the international market, and certainly in China, we continuously debate, is whether or not the US Treasury Department will continue with the strong dollar policy.
Yeah, I mean, people have been predicting for a long time that the dollar is going to lose its reserve currency status. The United States' financial system, its debt, its something else. That prediction has been wrong over and over and over again. We have a very large liquid market for treasuries. We have a very open capital account. We're reasonably transparent in the way we treat all of that, and I expect all of that will continue. I think the Triffin paradox, gets to the issue I said before, which is yes. The reserve currency is associated with the United States increasing its debt, but that debt carries a very low interest rate. We pay a very low interest rate on it. We collect a higher rate of return on our assets overseas, and so in that sense, it's sustainable. Secretary Yellen made a very important shift in policy when she said she wants the dollar to be market determined. I think to some degree that's admitting what was already the case. It was already market determined. But I think it's an important admission that I don't think she's going to be focused on making the dollar stronger. I don't think she's going to be focused on making the dollar weaker. I think she's going to be focused on the U.S. economy and its strength. Over the next year, I would expect our fiscal stimulus to lead to, to push the dollar in a stronger direction. But a normalization of the world economy and a reduction in risk, moves in the other direction for the dollar. So I don't, know what's going to happen to the dollar over the next year. If I knew, I'd be trading in a financial market rather than talking to you.
Right. Well, so if we look longer term, then let's say by 2030 or 2031, should we expect the current account deficit in the U.S. as a percentage of GDP be bigger or smaller or roughly the same as it is today?
I think it will be roughly the same. I think there is more of a chance that it's bigger because of increased consumption associated with the demographic situation in the United States than that it is smaller. But for several decades now, it's been roughly 2 to 3% of GDP. That level has proven to be perfectly sustainable, and I suspect that's roughly what it will be sustained at.
Right. That is also related to the other issue. And you just mentioned about Joe Stiglitz. I understand when you were a PhD student at the Harvard University, you also worked with Joe at the White House. So I'm sure the two of you are very close. One thing he said just a minute ago was that he thought that this $1.9 trillion US dollar stimulus package was exactly the right thing to do. Obviously, that's a short-term issue. But if we take a little bit longer-term view, my own view, I had dialogues with Bob Rubin early on last year, and he also said the same thing. The U.S. needed a lot of fiscal stimulus, but his expectation at the time was the government probably will allocate more money to investment instead of to household for consumption. I understand that you also were involved in some way in preparing for this bigger stimulus package. Is this exactly what you had in mind? The way that I think people are perceiving is it's kind of a little bit light on investment than on supporting the household. And the bigger question really is various U.S. governments during the past decades always talked about increasing investment on infrastructure. But it's kind of difficult. Why is it difficult to make infrastructure investment in the U.S.? And why, when you are already allocating a big amount of money for fiscal expansion, the portion of investment on infrastructure still seems to be a little bit small.
Yeah, so, and Joe was saying this. I mean, this is a two-part plan. Part one is to provide relief to households and to get the economy back on track. I think that will succeed. I think by the beginning of next year, you'll look at the U.S. economy, and I think you won't even know a pandemic happened when you look at what employment is, where GDP is. It will get us back almost all the way. In fact, if you look at the latest OECD forecast, they are forecasting a higher level of GDP at the end of 2021 for the United States than they had projected before the pandemic. Even China, they're projecting you're going to be slightly lower than what was forecast before the pandemic. The United States is the only country they expect to be above. So I think it will do that job. But I completely agree with you that is a very temporary thing. And you need to then sustain and strengthen that growth. Before the pandemic, productivity growth was too low in the United States. Inequality was too high. Climate change was a big problem. And so the next piece of legislation, which President Biden is calling Build Back Better, will be designed to address that. My hope is that it focuses on, and expectations focus on infrastructure, on climate change, and also on people, whether that's through education, dealing with child poverty, and repairing some of the social safety net. So that's going to be important too. In terms of this stimulus plan, it's a little bit larger than I would have done.
Okay.
I think it was a lot of dollars per month, but it didn't last a lot of months. So I think we can afford to do $5 trillion. I don't think, I think $5 trillion is easily affordable, but, I would have done probably a bit less in the first year and a bit more later on. But those are small quibbles. Nothing's going to be perfect.
It's certainly great to hear if the U.S. economy would become stronger, then it's good for the global economy. Hopefully, it's also good for the Chinese exporters. But we don't know, given the tensions we're having here. Now, with regard to the bilateral relation, economic relation we're talking about, this is kind of a little bit a tricky issue at the moment because if the current account deficit in the U.S. is a concern, what we are seeing at the moment is kind of like moving the current account, bilateral current account imbalances into the wrong direction because the U.S. wants to restrict the exports of the Chinese product, but they're also restricting exports of some high-tech products. The U.S., I understand, used to run the service account surplus against China, so the tourists, education, and so on. These areas are also becoming more restrictive. So what should we expect in the coming years, not just in the next 4 years, but for the longer? Are we going to really see higher degree of decoupling between the two countries?
The China and the United States are the world's two largest economies. I think the economic relationship between China and the United States may be the most important economic relationship in the world. I don't think decoupling is feasible for either country. And if the United States tried to decouple from China, Europe wouldn't decouple from China. Other parts of the world wouldn't decouple from China. So this isn't and shouldn't be reproducing the Cold War, having an Iron Curtain and two blocks on either side of it. I don't think that's possible. I think the relationship will have its ups and downs. And I think both countries need to decide, is their goal to deal with the other country but on fairer and better terms, or is it to decouple? And some of the steps I see the United States taking, I interpret very much as wanting to open markets in China, have more of a level playing field, be able to have American businesses invest more in China, sell to China without being located there, and the like. And then I think some other steps, export controls, are designed to create more of a delinkage between the economy. I see the same thing in China. The Chinese government is focused more on self-reliance, more on domestic growth. In many ways, I think that's a good thing. It's a rebalancing towards, I think, a healthier internal demand as a basis for growth. But then it runs into tension with China's global reach and global engagement. So I think both countries have some tendency to look inward, some tendency to look outward. And I guess I'm enough of a believer and optimist that the rational good thing for the world will be for the relationship to be in a healthier place on a time scale of 5 to 10 years. Whether we see that on a time scale of 1 to 2 years, I'm not going to venture a prediction.
Thank you, Jason. The other issue, which is probably of global significance at the moment, is the development of the digital economy. Particularly last year during COVID-19, these online activities played a very important roles in stabilizing economic activities. That's certainly the case. But at the moment, we're also seeing the regulators starting to take actions against the so-called monopoly and unfair competitive behavior and so on. We also saw some actions in Europe and probably in the US and so on. So this is becoming a global issue. But there's still question about how to define monopoly and how to best deal with the monopoly problem. Is the traditional, the old approach applicable to the traditional industries still useful for the new economy? I understand that in 2019 you prepared a report on competition for the UK government. Could you please share some of your insights about how should we look at this issue?
Yeah, I think in general, for the last several decades, there was a trend. It's been most in the United States, but to some degree, of making competition policy much weaker and not doing very much to deter mergers and to deal with anti-competitive behavior. Thinking is now shifting. Joe has been right on this for decades, but people are catching up with him in their thinking, and you're seeing slightly more aggressive enforcement. In the United States, we brought cases against both Google and Facebook. I think, though, that the legal process doesn't work well enough in the high technology sector, where developments happen so quickly. And these court cases, even in the best case, can take 5 to 10 years. And that's why my recommendation for the UK was that they regulate the digital companies, that they regulate them in a pro-competitive way. So I don't see a tension between this and innovation, because this is about enabling, leveling the playing field, enabling more new companies to come in, opening up standards, making data more mobile. A lot of benefits for consumers as well. And the idea is to try to have markets where there isn't just one or two firms, but where others can come in and challenge them. The UK is standing that up. Europe is debating rules like that. The United States is at an less advanced stage in those discussions, but we're thinking about it as well. Ultimately, we can't have a single global regulator. Couldn't have something like that in this sector. But what I think we could have is convergent regulation, where different countries around the world have similar rules, similar standards, and then the companies can basically pick whichever is the highest reasonable one and operate on that basis all around the world. And I think it would be great if China was a part of those discussions, thinking in a similar convergent way to the way the UK and other countries around the world are thinking on pro-competitive digital regulation.
Thank you. In fact, I read your report several times. One of my main takeaway for looking at the monopoly in the digital economy, your recommendation was focusing on contestability instead of the market share, which I thought was a very important message to the scholars and the policymakers. Given the time constraint, Jason, I want to raise my final question about income inequality in the US. I'm sure this will be a big issue over the coming decade. And in fact, the various governments are also trying to do something. I also understand that the Biden administration also made a big commitment to improve income distribution. What would be the right approach in dealing with this, particularly given what we discussed just now? The U.S. is probably not going to be big on manufacturing. So should the U.S. deal with the income inequality problem by supplying more jobs, or we have to leave it to social security system? What is the right approach?
Yeah, so I want to make a bold prediction. I think income inequality may start to decline in the United States.
Okay.
In fact, in the labor market, income inequality declined from 2015 up until the beginning of the pandemic. Low unemployment rate, plus a lot of states and localities raising their minimum wage, meant that wages grew most for workers at the bottom than for workers at the top. The American Rescue Plan, the Biden stimulus, is enormously progressive in two senses, both who it gives money to, and also by bringing the unemployment rate down, that should hopefully raise wages, especially at the bottom. And then following through on that will be important. There's a lot of debate over the causes of inequality. I agree with everyone. I think there are lots and lots of causes, and I think there's lots of solutions. We need to deal with it in the market, with macroeconomic policy, low unemployment rate, with institutional policy, expanding labor unions and raising the minimum wage, with longer run policy, education, and then even all of that is not going to do enough, and so we need a more progressive fiscal system, both higher taxes for high-income households and expanded benefits, especially for children, for health care, and the like. And with all of that, I actually think we're not going to undo decades worth of increase in inequality, but I think it might start to move in the right direction over the coming years.
Well, thank you very much, Jason. I like all of your opinions you just shared with us, although I must say you're probably a notch more optimistic than I was when I walked into the room on many of these issues, but your opinion, your insights about the future role of manufacturing in the U.S., it's probably not going to rise, and the U.S. would probably focus on its own comparative advantage. The current account imbalance is probably okay as long as the economy is doing okay, and you don't believe there will be a substantial decoupling between China and the U.S. on the digital economy. You said there will be some need for regulation, but should be pro-innovation competition. And also, finally, on the U.S. economy, you also said the U.S. economy would be stronger this year or maybe next year than expected, and the income inequality would start to decline. All these are great news for us, so thank you very much for spending the time and sharing with us these optimistic views. As I said, I like all of them. Unfortunately, we have to do this through the video, but I really hope that in the very near future, we could meet face-to-face, and particularly would welcome you to visit Beijing to this forum, but I'm sure you will attend many other forums as well. So thank you very much.
Thank you. 谢谢.
Thank you.
I could take it off.
No, that's okay. I think you look perfectly fine. Hi, everyone. It is my great honor to have a dialogue with David Rubenstein, co-founder and co-chairman of the Carlyle Group. I think everyone knows that David has a huge audience for his TV show, Peer-to-Peer, on Bloomberg. Today, we have the honor that we can ask David a few questions. Obviously, through his interview, he has met many amazing leaders from all the ranks, business leaders, political leaders, academic research leaders, and he has his new book, How to Lead. So I wonder, what are the common characteristics you're seeing among all those leaders?
Well, before I answer that, let me just say that I've made 3 great mistakes in my investment career. One, I turned Mark Zuckerberg down when he was in college to invest in Facebook. Secondly, I sold my shares at the IPO in Amazon. And 3, I didn't ask Neil Shen to head up our venture capital business in China after he had run a company that we were an investor in, C-Trip. That was my biggest mistake, probably, because I didn't realize what an incredible investor you are. And thank you very much for taking the time to both do this discussion with me and to help me understand much better what's going on in the China investment world. To answer your question, I would say that the business world, in leadership in the business world, we've seen a lot of it recently because people have taken advantage in an appropriate way of COVID and reshaped their businesses and reshaped the way they do business in ways that nobody would have ever thought. Think about this. The Industrial Revolution, start to finish, took about, I would say, 100 years to change the way we do business. The internet came along, it took about 20, 25 years to change the way we do business. The smartphone, 5 to 7 years. In 1 year, COVID, because of Zoom and other technologies, has changed the way we live and do business. And the best business people, like you, have adapted to this and made incredible investments in companies that have been able to figure out how to navigate this. So the best business leaders are the ones who can move quickly on a dime, who aren't wedded to the past, and who have a vision of how to get to the future and are willing to walk through walls to get to the future. In government, leadership is different. Leadership is where you have to bring along a lot of people. Business is not quite that way. One person can drive through walls in business and get people to follow. Harder to do that in government. In government, what we need are people that know how to convince people to follow them in an appropriate way, and that's much tougher in some respects. I think there's different types of leadership, but if the people I interviewed, clearly the business leaders and the government leaders all had one thing in common: persistence, persistence, persistence. Don't give up. And they often had people who failed. There were people who failed before. If you haven't failed, you've never tried anything important. I'm sure, Ken, you probably had some failures in your life. I don't know what they are, but maybe you had 1 or 2 investment failures. Everybody has some failures, and that makes you stronger. And that's what I think these people have in common: persistence after they failed.
Oh, I think that's a very great comment. You talk about failures, and clearly we made mistakes, in our 15-year history in China. And indeed, we learn from those mistakes and get better and better. But when those founders and those business leaders have difficulties and have failures, how they deal with those adversity moments, David?
Well, the thing is, I think when you have failures, what you have to do is not blame other people. I think it's a good thing to look at yourself in the mirror and say, maybe it was my mistake. So I think really good leaders don't say, it was your fault, your fault, your fault. It wasn't my fault. I think good leaders do that. I think also when you have a failure, you have to be very careful and go back and look at what you did wrong, figure out what you could have done better, and try to do that in the future. And so I think really good people, particularly in business, are analytical enough to realize what mistakes they made and try to fix that in the future. So whatever you've made a mistake, and I doubt that you've made many, you've probably gone back and said, what did I do wrong? What did I do that could have been better? And you try to fix it in the future. And that's what I think good business leaders do and good investors do. They analyze what they did wrong and they fix it the next time if possible.
Well, let's talk a little bit about Carlyle, which you have been leading in the last 35 years. And when you started, you do not have a financial background. You were a lawyer before, and Carlyle picked Washington, D.C. as its headquarters, which is not a typical venue for a private equity firm. But after 35 years, you guys become one of the largest private equity house in the world. What are the secret sources behind it?
Well, a couple things. One, there's an old saying that when you're getting kicked out of town, get out in front and pretend you're leading a parade. So what does that mean? Take advantage of the situation you find yourself in. So we were in Washington, D.C. I was in Washington. I'd worked in the White House. So if I had moved to New York, where all the investment bankers were who had financial skills, people would have laughed at me if I said I'm going to start a firm. In Washington, they didn't laugh quite as much. And I said we understood companies affected by the government better than the guys in New York. And it sounded true, and maybe it was true. Second thing is, I came up with an idea that changed the way private equity was conducted. Historically, private equity was only one fund at a time. You had one venture fund, one buyout fund, and so forth, and only in the country in which you were resident. I came up with the idea of having multiple funds, a buyout fund, a real estate fund, a venture fund, and so forth, and then globalizing it. And that's how we did it. And last, I had partners who were willing to work together. I've had two partners who've worked together with me for 33, 34 years. That's very rare. It's very hard to do that in business. And so we got along with each other because we let each other focus on the thing that they did best, and we never tried to undercut each other. And as you know, in the business world, very often people like to take credit for things and undercut each other. We never really did that. So that's how we pulled it off, and we got lucky. Luck is the most important thing in the business world and in life, and we were lucky as well.
Well, talk about luck. I think we back in the at the C-Trip days was very lucky that to have Carlyle make the investment in us in late 2000. I still remember that. I was actually heavily involved in that negotiation with our team in Hong Kong, and I think at the C-Trip we're very grateful to Carlyle because that time internet bubble has busted. And there are not a long list of investors willing to back us up. And I think that actually make a difference. And so C-Trip have grown from a startup, maybe one of the top online travel company in China back then, to a leader in the travel service industry globally. And I can't thank more to Carlyle for what you guys have been done. This is oftentimes the entrepreneurs and the founder need the most.
Oh. Well, I thank you for saying that, but I should tell everybody what really happened. We got lucky. We made an investment. We thought we tripled our money and had done incredibly well by tripling our money, or maybe 4 times our money. But we sold at a valuation when the company was worth, what was it, $1.5 billion, $2 billion, something like that?
Yeah, around that.
$2 billion. What's the valuation today?
25.
25. So we sold a little bit too early, would you say?
Yeah, well, you have a lot of other great investment, and you would have been make more. And these are the mistakes we oftentimes made, and we try to do better next time.
All right, but let me ask you a question while I have the floor for a moment, because I'm more used to asking questions. When you were you went to Yale School of Management, and then you went after that to investment banks and other things in the United States. What prompted you to move back to China, and what prompted you to start C-Trip?
Yeah, I think I've been doing really well. When I was working on Wall Street as an investment banker, but I noticed there's some greater opportunity for me if I go back to China. So I did that in 1994, and after I spent a number of years in China, I got to know many private entrepreneurs, and their success, their stories has inspired me. So I started to think that I should be an entrepreneur myself. And in 1990, I also noticed that the internet has rapid adoption among the Chinese users. So, it's very natural to start an online travel business And the travel industry itself has gone through tremendous growth in China. So I think I was very lucky to make that move. And be entrepreneur is something great experience for me. So I think from working in the U.S., coming back to China, and then become an entrepreneur, that's probably one of the best learning curve I can have.
Well, let me ask you a follow-on question. After you did C-Trip and it was very successful, very often when somebody starts a company that's successful, they say, I can do it again. So why did you decide to go in the investment world, picking entrepreneurs rather than start your own company? Why did you decide to go into that world?
Well, I think my previous experience as an investment banker clearly has positioned myself to be on the other side of the table, helping entrepreneurs. And I have observed firms like yourself and others has helped entrepreneurs in most difficult times. So I feel there's a great value I can contribute to a creation of value and a development of the industries in China. And I have feel like I actually best fit for that. This experience at the C-Trip has clearly put myself into a position I understand the entrepreneur probably better than some other investors.
One final question I'll ask you right now about your investment experience. I want people to understand this. You joined an American firm called Sequoia. Now, Americans think that they're pretty smart, and so when generally people work overseas outside the United States for American companies, investment companies, they say, all right, we're going to let you look for the deals, but in the end, we are the final investment decision. We make the final decision because we're more experienced, we know things better, you will learn from us, etc. And had you come to Carlyle and said, I want to invest for you, we would have said, great, we love you, but we will make the final investment committee decision in the United States. How did you convince Sequoia not to do that? In Sequoia, you basically were given the right to make the final investment decision. How did you get that through the investment committee at Sequoia?
Well, I think that's how Sequoia was set up. I think, in the early days when Sequoia went to Israel, that's how we did it. So it has been run a decentralized, management systems. So every, region, every country has its own management team, and they make management and investment decisions. I think that's critical to our success. While there are a lot of knowledge to share on global basis, there are a lot of local know-hows, and you only have to, really gain the insights on those local know-hows, so you can do better in winning the hearts of the entrepreneur and to, make investment effectively and efficiently. And obviously, there's still a lot common in, what type of entrepreneur we try to back. Actually, speaking of that, when I read your book, I find very interesting that many of the traits that you talk about in your book, I can find very much similarities here in China. When you talk about their battles, I think you make a point that, when you make decisions, great entrepreneurs make decisions. They're not really made based on analysis, but rather you make decisions based on your heart and intuitions. I've been very lucky enough to be associated with many leading tech entrepreneurs in China. I oftentimes, at a critical moment, they did the same thing. And you talk about Branson, that when he get into a business, he's not trying to make a profit, but rather he wants to create the very best business in that field. And I think that's the same, traits we're looking at for any founders come to us with a business, business proposal.
It's interesting. I'll comment on both of those interviews. Richard Branson, of course, is world famous for his Virgin brand. And what he told me in the interview was when he thought he had a good idea, he'd set up a company, and he never really focused on the profitability of it. And most people were saying, how can you not worry about the profitability? His idea was, if I build a good service or a good product, ultimately it'll work out. And that's true of all great entrepreneurs. Bill Gates, Steve Jobs, Mark Zuckerberg, Jeff Bezos, they didn't say, I'm going to become a billionaire, I'm going to make more money than everybody else. They just said, I have a great idea, and I'm going to work hard to prove this idea is right. It's people who have ideas they want to prove that are right that make great fortunes. It's not people who say, I want to make a great fortune, let me come up with an idea. When Jeff Bezos, interestingly, he said something that scared me a bit. He said that one of the secrets to his success is no big decisions before 10 a.m., no big decisions after 5 p.m., and he gets 8 hours of sleep a night. And I'm thinking, oh my God, if I'd only gotten 8 hours of sleep a night, I could be a lot more successful. How many hours of sleep a night do you get?
I do need 8 hours of sleep because that's how I'm able to make better decisions on the second day. I think, again, when we make decisions as an investor, I'm pretty sure that also applies to you, that oftentimes those decisions are made out of heart and intuition, not necessarily based on 200 pages of financial model whereby there's many assumptions and there are many mathematical formula behind it. Those numbers are important, but at the end of the day, what really I think triggers you to make the most important decision are really your big views and where your heart goes.
I agree with you. For example, I interviewed in the book Warren Buffett. I don't think Warren Buffett's read a lot of big investment committee memos. Sometimes in our firm and other firms as well, I think the young people think that the quality of the deal relates to how thick the investment committee memo is. If it's a 500-page memo, it's going to convince you it's a better deal. Whereas I think Warren Buffett, he basically probably reads one page and he makes a judgment based on his intuition. Warren Buffett has greater intuition than other people. That's why he's probably the world's greatest investor. So I would say, in the end, it's your gut, your experience. That's what an intuition is. And you can read memos, but in the end, if you just read the memos, you're never going to be a successful investor. You have to have intuition about what's going to work. And what is investing all about? It's about one thing, predicting the future. What is the future going to bring? And if you can predict the future, that's really not something you can get from an MBA business model. It's your intuition. So let me ask you a question, Ken, about this. Today, COVID has changed the world, as we've talked about. How do you think it has changed Chinese entrepreneurs? Are Chinese entrepreneurs more creative than they were before, taking advantage in an appropriate way of COVID? Are more creative companies coming about? And what areas do you think are going to be the most attractive post-COVID to invest in the venture world in China?
That's a very good question. I think, we have been focused on technology innovation in China for the last several years. And for those companies, they actually have weathered through COVID very well. In fact, many companies are seeing better user adoptions and the increase of their user base in the last 12 months. And I'm pretty sure many of those user behaviors and adoptions will remain. For example, e-commerce. We already have a pretty high penetration of e-commerce before the COVID. But what COVID has done is it has accelerated the e-commerce penetration in China into lower tier cities. Today, that the user base has increased, and also the categories the e-commerce company can cover has expanded. Traditionally, consumer electronics, apparels, food and beverage, you can buy those products online. Today, you can do fresh product and groceries. And that is obviously, a very, very, large, addressable market for all those e-commerce companies as a group. And thanks to those e-commerce platforms, many of those consumer brands today are built directly through online platforms. And they obviously use very different marketing tools like before. Instead of Subway advertisement, today they use ByteDance or Tencent or Kuaishou as their marketing channels. They also has come up with new generation of brand awareness. So and many could actually go to overseas countries and sell to the rest of the world. The user base is also new. We're talking about the millennials who would even love those products more than the old generations. So I think all those are very exciting areas for investor to pour money into.
Well, Ken, let's suppose I said to you, I tell you what, you're a brilliant investor, but I want your judgment on this. I'm going to give you $2 billion to invest in venture capital, but the only condition is you can't invest this $2 billion in either China or the United States. Where would you invest that money?
Very good question. I would say Europe is actually picking up, fairly quickly. And there's no difference from, I think, U.S. And to some extent China. SaaS enterprises is one of the major, I think, area that we see some early success. Some of those companies actually were founded in Europe, like UiPath. And I think Southeast Asia and India are also of great interest. Those countries are probably a little more like China. The consumer internet has a lot of applications. For example, the takeout, the ride sharings, the e-commerce, et cetera, So I won't be surprised that we'll see the Southeast Asia version of the Meituan, the Pinduoduo to be created. And those countries will create multi-billion-dollar companies.
Now, let me ask you about an area that I have actually invested in through my family office, and I don't know whether it's going to work or not. It's an area that is both now increasingly important in the United States and in China, and that is the area of space, which is to say launching satellites, other kinds of things in outer space exploration. How attractive is that to you, or do you think that's not a big enough market to make it worthwhile for you to pursue that area?
I think it's a very exciting area. I think the U.S. obviously we have SpaceX, and the whole good company Starlink. In China, I see some private company has been trying to catching up. They actually have used SpaceX as a role model. On the technology side, I have to say that we are probably a few years behind. It's going to take a while for those young startups to develop all those type of technology. But I'm sure that the application is there, and that there's mathematical or computational issues that they have gone through. But I think they'll get there. It's a matter of time.
Now, I
actually talk about.
I'm sorry. Go ahead.
Yeah, you talk about the big pictures. Go with intuitions and look into the future. So what about the next few years in the U.S.? We have just seen a 1.9 trillion package, and that's going to probably have pretty significant impact on the capital market. What's your take on that?
President Biden was in the Obama administration. When they came into office, there was a terrible Great Recession that they had to deal with. So they came up with an economic package which was $900 billion. They didn't want to touch the $1 trillion number. They thought that would be politically too difficult. In hindsight, they think they made a mistake by having too small an economic package, and therefore it took too long to recover. So just like generals like to fight the last war, politicians like to fight the last recession. And so what Biden decided to do was to have a package that's bigger than probably what is really needed, but so big that there would be no doubt that it would solve the problem of the economic recovery. So probably the package is 2 or 3 times bigger than absolutely needed, but I think he just wanted to put everything into it. So what's the impact of that? Well, we probably are going to have a little bit more inflation than we would have probably preferred, but we've had so little inflation for so long, it's not considered a big problem. Secondly, we have more debt than we probably need, but we have so much debt already, it doesn't seem to be bothering the financial markets, so right now they think they can still tolerate this. And third, the interest rates are probably going to go up a little bit, but they've been so low for a while that it's probably not going to be that adverse for the stock market and the equity market. So I think they knew they were putting together a big package, maybe bigger than was necessary, but they didn't want to make the mistake of going too small. I think in the end, it'll probably come back to haunt them, if at all, in maybe 2 or 3 years. But right now, his focus is this year, getting the economy going forward this year. And we're not really that worried about inflation or higher interest rates right now. We'll see what happens in 2 or 3 years. But let me ask you a question about, go ahead, question about another area I'm interested in. And if you look at people, when they get wealthier, what they want to do is eat better. In other words, as a general rule of thumb, throughout the history of the world, when people are not wealthy, they eat whatever they can get. When they get wealthier, they want to eat better. Now, sometimes people like to eat better, even if it's not healthy for them, but some people want to eat food that is healthier for them. China has enormous population. Do you see investing in the healthy food area or the food area as an attractive area, or it's not something that venture capitalists find that attractive?
No, I think it's a very interesting area. In fact, first of all, the traditional food and beverage space is, also a very attractive area for us because the new way that they can reach out to their users. We have a emerging leader in the food and beverage area, which we invest just about over a year ago, and they're obviously ambitions to take over Coca-Cola one day. On the other hand, yes, you're absolutely right. People are paying more attention to healthy foods. So one of the main attraction of that particular beverage company is to sell no sugar or low sugar. And that's important because the younger generation would put that as a major considerations. And obviously, we know Coke has product try to address that issue. But there are companies say, I'm going to launch a product which does not have sugar at all, but still will be attractive from a tasting perspective to the younger generations. And at the same time, we're seeing, obviously, synthetic food as another area that could be big in China. From beef to chicken, to all type of product. Even liquor. I see companies who try to use synthetic biology, methodology to come with those hopefully lower cost but equally tasting, product.
Now, the great Chinese technology companies, the most famous ones, Alibaba, let's say Ant. Tencent, Baidu, ByteDance, all of those, most of what their revenue comes from, I would say, is in China. There's some, obviously, TikTok is a different bit, exception to that. But generally, most of their revenue comes from the large population in China. And I wanted to know, do you think over the next 5 or 10 years, these gigantic Chinese technology companies will successfully take their technology and have it go around the world the way the American technology companies, Amazon or Apple or Facebook have been able to do?
Yeah, I very much I think look forward to that because some of those companies has become very competitive because in China the market is very competitive. So if you is able to emerge as a leader and you really have a product which is very, very strong. And some of those could be, similarly appealing to global users. DJI is a great example. I think its product has been accepted around the world, not just only in China. ByteDance is a great example, and there's many others that who has, sold to the rest of the world. Thanks to, e-commerce. Today, if there is a great Chinese product, they can penetrate to the rest of the world in a much faster way than the old days. DJI only took just a few months to build its distribution network in countries like the U.S. and others. Right. And we have also some companies in the fashion world like Shein in Guangzhou, who has been very successful, become a popular brand in Europe and as well as in America.
When you're looking at a new company, do you want to know what 30-year-olds think about it, 20-year-olds think about it, or 70-year-olds think about it?
Well, I think depend on what kind of audience this particular product is targeting. If this is digital healthcare, I probably will looking at a more sort of mature user base. But for the beverage company I was talking about, right? For the apparels and consumer electronics, I really would love to see how the millennials and the the 90s sort of response to those products, because they're going to be the recurring customer for many years to come. They better love it for this company to become a great company.
Now, if somebody says, I want to be the next Ken Shen, I want to be the next great Chinese investor, a young person that's watching this, what do you tell them to do? What would you say the one or two skill sets they need to have, or the one or two types of experience they need to have before they're going to be the next you?
Well, I think, be an entrepreneur. I think that's probably most important. I think you were an entrepreneur. I mean, you start a car out and try to build a great business and try to challenge, the traditional private equity firm. And you did that very successfully. Same for me. No matter whether it's C-Chip or whether it's Sequoia China, I always try to be, an entrepreneur, follow my heart, and try to create value and try to solve problems. And in my case, I try to solve, the challenges and problems some of those young entrepreneurs have.
So, Ken, as I got lucky in the business world and more successful, I started giving away money, got involved in philanthropy, try to give back to society. Have you reached that stage yet where you can take a little time to think about what you want to do beyond business, or you're not yet focused on those things?
Definitely, following people, people like yourself, and I think that's a very important part of our thinking, our entrepreneurial efforts. This is no different to the business which I'm trying to do. So, for example, we are a long-term supporter for the Children Foundation under China Development, Foundation. So I think this is a very natural extension. I think we're running out of time here. So
okay.
It was great, chatting with you, and I hope to see you in person. And best luck with those peer-to-peer interview sessions.
Thank you very much. I hope to have you on it soon. Thanks a lot, Ken. Bye.
Thank you. Thank you, David.
Okay.
Okay, good. So this session is about economic development and innovation in the next decade. So we're going to discuss something that has long-term impact rather than short-term effect. Let me first start from China. China has just adopted the 14th five-year plan. So from it, we see a roadmap for the next 5 years and beyond. There are many, many things in this 14th five-year plan but one of the most significant emphases is about science, technology, and innovation. So there is a main section right after the introductory section in the plan. It's about it. So my first question to you is, from your perspective, what are the biggest challenges in the US for the next decade? Because US does not have the five-year plan. So please share with us your insights on this or your assessment.
Well, thank you, Yingyi. It's fun. It's great to be with you, although I wish I were there in person with you and with everybody else. So it's true. The Chinese 14th five-year plan, as previous plans, lays out a program, a highly plausible program for reform on both the supply and the demand side of the market. Innovation is a key element of that. I don't think there's any doubt anymore about China's capacity to do this. Maybe 10 years ago, when innovation was a significant subject of discussion, but the performance wasn't as dramatically impressive as it has been over the last 10 years, people might have been skeptical. I don't think there are any skeptics left. But turning to the United States, I mean, I think that it's fair to say we have really substantial problems to deal with. So I don't have any doubt we'll have a delayed version of a reasonably strong recovery from the pandemic. But I say delayed, I mean delayed relative to China, because we didn't control the pandemic without the benefit of the vaccine. So that's what's happening now. But then I think, you know, then the main event is really, you know, dealing with the sort of economic, social, and political polarization that characterizes the country. This is already fairly dramatically high. You know, there are studies of the Congress showing nearly no overlap between the two parties' positions on various issues. Our new president, President Biden, has, you know, stated clearly his goal of sort of bringing us back together, and I think a lot of people think that's a very worthy goal, but there's no question that that's a difficult challenge. I think that goes at the top of the list. If we don't get that job done in some form or other, and it really means dealing with a rising trend in income and wealth inequality that got worse rather than better during the pandemic for obvious reasons. Relatively low-income people lost their jobs, and a lot of other people worked online. And so we have, I think, a great deal of this huge stimulus package that was talked about in the previous dialogue is an attempt to jumpstart that process, you know, to really shore up and limit the longer-term damage that people experience. If we get that job done, then we have some challenges. I think we have to recommit ourselves on the American side, to, much as in China, to science, technology, to bringing young people into those fields. It's not that we're, you know, in the dark ages in that area, but I think there's been some loss of momentum and commitment, and we need a vision surrounding it. We really need a vision. You know, this is the society we want to be. We want to be kind of inclusive, dynamic, innovative, and so on. And we have challenges like infrastructure. We've let, you know, people have various impolite ways of describing this, but, you know, but by and large, I think there have been deficits on the public sector side with respect to investment. We probably need to pay higher taxes than we have. So we've got a big agenda before us. The last thing I'll say, you know, in response to your question is there really isn't any way to have the kind of clarity that you have in China about what's going to happen in the United States. We'll have an election 4 years from now, presidential election. People have not dismissed the possibility that we'll go back to where we were in the last 4 years, although I don't think that's the most likely outcome. But in our system, it's very difficult to have a kind of long-term forward-looking plan that has the kind of credibility, you know, and expectation sort of converging force that is so beneficial in China.
So you mentioned many things here. You mentioned that you need a vision, but the context is the polarization of the society. That's a very important context we have to think about. So in that context, is there any consensus about specific things such as infrastructure investment? This is something seems to be easier to have a consensus. Is there any consensus between, say, Democrats and Republicans on the elites and the public on this?
If there is, it hasn't become clear yet. So I think, you know, without pretending to be a political analyst, we haven't tested that proposition yet, right? So the first round was, you know, get out of the pandemic, spend a lot of money, and there's a distinct possibility that the Republicans will do a kind of about-face relative to the tax cut that they engineered in the early days of President Trump's, presidency, time in office, and say we can't afford to do this. We've already piled up, nearly 100% sovereign debt to GDP ratio. So we can't afford to do this, and it's not that important anyway. So, I mean, I think the answer is many of us hope that we're going to move in that direction. But I think another enormous package, especially one financed by debt, that's focused on infrastructure, is not the best. It's not the most likely outcome. I think in infrastructure, our challenge really is to sort of build it into the DNA of where government, works, rather than have a sort of massive package that deals with everything, digital infrastructure, bridges, ports, airports, and so on, the highway system, railways, which are kind of underdeveloped in the extreme, and so on. We need to take them piece by piece and put those together, again, with a vision behind it, but I don't think it'll be a big bang.
But the U.S. used to have one of the best infrastructure in the world. You've done this before.
Yep. Deficits. It's a bit of a messy picture, and I won't try to pretend to try to explain it. But the first order statement is only the federal government can run deficits and engage in that. So it really has to be a partnership, I think. There are some important things that states can do, and we'll probably get to them in a minute. And you don't want to write them out of the script, because on the ground they probably have a better sense of some better sense of what they need. But the federal government is going to have to be a player in this.
Are you optimistic that in the next few months that a major infrastructure investment bill will be passed in the Congress?
I think the Biden administration is going to try to do it, but I have to say, I think there's significant potential opposition to that, and that one, unlike this past stimulus bill, may have to be toned down. But I'm not, that doesn't distress me greatly. I mean, if we get started, and the underlying premise is that we're starting to make investments that are kind of important. My experience of this comes from being around all of you in China, learning from you, learning from being in other developing countries. The public sector investment is a critical element in sort of economic development. It's complementary to private sector investment. It increases the returns to private sector investment. And I honestly think if we keep underinvesting on the public sector side, I mean, the critical public sector investments are all kinds of infrastructure and, human capital and science and technology base of the economy. And so if you underinvest in those in the long term, you're going to reduce the rate of return on private investment, and then you really are in the position of slowing things down. And we have a downward trend in productivity, as you know, Yingyi.
Yes. The good news is the interest rate is so low, so the cost of financing
that is true.
Really low. That's a good news.
Yeah, no, I would say yes. So for whatever reason, we have very low interest rates. I mean, there are some people who are, and I count myself, at least on the margin as one of them, about sort of long-term, occupancy of the low interest rate space. But in part because it encourages, increasing debt, financing using that on both the public and private sector side. And eventually, I think you may run into problems with, financial or fiscal stability. But we're probably a long way from that. Yes, this is a good time to do some long-term financing. There's no doubt about it.
You also mentioned about inequality. There are two sides of the issue. One is obviously a fairness. The second part, the economists actually, we are very much focused on that, is the implication for efficiency implications. That is, inequality may not bode well for productivity, for market development, etc. And recently, the chair of the Council of Economic Advisors, Cecilia Rouse, talked about the U.S. the Biden administration will aggressively address the issue of reducing inequality, but also from the perspective of increasing productivity. So what do you make of it?
No, I mean, I actually agree with that. So let me just provide some color commentary. What happens when the inequality gets fairly extreme is a number of things. First of all, we live in a world where we're making transitions, and you and I will probably talk in a minute a little bit about the digital transition, which is a very major one. At the low end, or when inequality is extreme, the low end is like the bottom 50%, are short of resources as individuals and families to invest in the skills that they need to participate productively in the new economy. And that has, that makes the inequality even worse than it is, and it adversely affects the accumulation of the right kind of human capital that directly affects productivity. So I think, that the assault on this is going to have to be a multi-pronged one. It's not just redistributing income, although that may be an important part of it, through the tax system and so on. Maybe we'll have some version of a universal basic income or something that looks or sounds like it. But we also need to address deficits in education, deficits in the area of sort of skills and retraining, and so on. I mean, the way I describe our situation now is that it's not all bad, but it's so uneven. And the unevenness, unfortunately, is correlated with the income inequality by virtue of where people live and work. So it is all the things you mentioned. It's a macroeconomic problem. It's a productivity problem. It's an investment problem because people have to make these investments, and there's a lot of households whose incomes and balance sheets just don't have any flexibility left.
Yes, I agree very much with you. It's not it's also an investment problem. And also in this context, there is a discussion about structural inequalities. Probably you heard this term also. Can you elaborate a little bit on this? What is referred to?
It's a bad dynamic, Yingyi. So one of the things that I've observed in economies and societies that handle this rather better is that a key element is the provision. If you're interested in economic and social mobility as the kind of rock bottom core element of equality of opportunity, that to use the term that we Americans use, then basically you have to. It isn't just working on the income distribution. It's the provision of very high quality, absolutely crucial services that are low cost, so everybody has access to them, and education and healthcare are core elements in that. That's not the direction we've been going. I mean, I don't want to bore all our audience and listeners, but in American higher education, for example, we have private institutions. Their costs have been rising dramatically faster than general prices and wages and incomes in the economy. Their performance is more like the healthcare system. And we have public universities, and they're under financial pressure because they're states. They're funded by states, provinces in the Chinese context. That states are under financial pressure. That gets transmitted to the public sector institutions. And so what happens in states, in state universities, is they charge domestic residents of that state a small amount and subsidize the education. And then to make up the difference, they charge outsiders, which means foreigners or Americans from other states, very large tuition fees. And the fraction of people, and to balance the book, so to speak, they keep adding to the number of people who come from outside in order to kind of get the revenue up. So all over the place, we're deviating further and further, from this notion that there's a set of opportunities that are affordable for everybody that they can use to advance themselves and move productively into society and into the work environment with, the human capital and skills that you need to thrive. And that's structural. I mean, you can't fix that without sort of going after the whole structure of the system.
Good. Let's move on to the issue on digital transformation.
Right.
There is one major section in the Chinese 14th five-year plan. It's about digital economy. There are 4 chapters devoted on the issue. This is, I know you have been doing research on this. This is a major technological transformation, will have a huge impact for the next decade. What do you see as the major technological advance and its impact on the economy for the next decade?
Well, I think, we understand. By the way, you and I are both involved in helping out with the Luan Academy and benefit from the studies they've done. They've certainly been informative for me and kind of having insight in addition to the kind of five-year plan level discussion about what's going on. But I mean, I think we all agree that we're in a multi-year process of digital transformation of our economies. The way I describe that, Yingyi, to myself, is that, we in the first industrial revolution, we basically harnessed energy and got machines. And they transformed, the kind of physical layer of the economy, right? We could move around more, we had bulldozers, but there's another layer of the economy, which is critical. It's the governing layer, and where information flows and things are coordinated and decisions are made and transactions occur. And we all know it's there. As economists, we don't model it as well as we do the other part. And the digital age is really the introduction of machines, powerful machines that automate and augment humans in that layer. And that's the core of what's going on. And it's been happening at a relatively rapid pace, with China in the lead in many areas, like e-commerce, mobile payments, fintech more broadly, and so on. But it's happening everywhere. And the pandemic accelerated it dramatically. So I think, and it's a multidimensional thing. So I expect this to sort of play out on a global basis with, relatively mild differences across geographies. But there's some challenges. The opportunities are enormous. I mean, we wouldn't have survived the pandemic, without the digital infrastructure that we've got, let alone the digital infrastructure that we'll have in 5 years, because we would have had to go to work physically, across the economy to get it done, as opposed to only partly. So anyway, there's this huge acceleration in adoption, and it's all going to happen very fast. So I think the areas that we're concerned about are, can the workforce, adapt quickly enough with help to the shifting nature of work? I'm not particularly worried about massive unemployment. And if we get huge productivity gains, the simple truth is that history tells us, we'll work less and have more leisure time, and the institutions will adapt to that. So I think that long-run concern is not the one that should be focused on. The immediate concern is, we've got 10 years where work is going to change a whole lot, and we've got to help people, find productive and rewarding work in this new world. And it's not new, to be honest with you. We've had automation and the elimination of routine middle-class jobs for a couple of decades now. All right, I mean it's the job and income polarization that's resulted from that has now been well documented in virtually all the developed countries. So that's a challenge. And then I think we also understand, and there'll be a lot of talk at the China Development Forum about monopoly power, regulation of internet content, and so on. But the huge opportunity here, which I hope doesn't get lost anywhere, is the ability of these digital technologies to foster inclusive growth patterns. I mean, Neil in the previous dialogue mentioned this. The big impact, and the Luan Academy has documented it. The biggest impacts are in populations that are relatively remote from the urban infrastructure that is available for those of us who are lucky enough to live there. So, and I see this everywhere. I mean, in the pandemic, we had a huge acceleration in the use of digital in healthcare. Why? Because we had to, right? Healthcare is a sector a little bit like education that sort of drags its feet a little bit with respect to the adoption of these technologies, but we just lost the ability to choose. And so once you make that transition and you discover, that primary care can be extended using the digital platforms, the doctors and patients can get a lot done there, that we'll have an explosion of innovation in home diagnostics, and so on. I mean, it's really quite impressive what's going on. So I think the upside is enormous, and to achieve it, we'll have to calmly and without getting in a panic about it, deal with some of the challenges that the digital revolution presents us.
I understand that there are a lot of worries about the implication of digital technology on unemployment in the U.S., even among economists. Certainly less so in China. People are very enthusiastic about new technology. And there are unexpected benefits, as you just mentioned from the previous discussions, that the outreach to the very poor area actually helped what we want is the inclusive growth.
The inclusive part, yeah, exactly.
Yeah, digital technology actually helps inclusive growth. I still remember 20 years ago, people talk about digital divide. That was the theme 20 years ago. I still remember that. But now we talk about the inclusive growth. Now, I just want to ask you this question is that in China, for example, the mobile payment really moving very fast. One of the reasons is it was a lack of the very efficient payment system before, such as credit cards, personal checks. But the U.S. and also Europe, you had a very developed payment system before this digital transformation. So you do have a so-called legacy problem here, what we call past payment. Do you see this actually you are overcoming this? Actually, they will overcome this problem and will accelerate? How about Europe? That's another story.
Yeah, I do, but you're right. I mean, the legacy problem means that, that there's a lot of entities that are going to need to change their business model or won't do very well. If a very rapid conversion to, say, mobile payment system, contactless mobile payment system were to occur. So we're just slow. And that's true of Europe as well. the attractiveness of the mobile payment system, even without a pandemic where you don't have to touch anything, is so great. I mean, the efficiency is enormous. I mean, my friends in that world tell me that, the costs per transaction in the mobile payments world are, like a fifth, of what they are in our systems like credit and debit cards and so on. So I think we'll make that transition because it'll be irresistible. But there are legacy entities and legacy headwinds to it. So it'll be a bit slower. I mean, there's lots of examples of that. By the way, reason to your earlier point, but we were talking about the digital divide, and then the mobile internet came. The mobile internet's only 15 years old. It's astonishing, how important and inclusive it has been on a global basis. I mean, most of the developing world that's still in the low income category is just going to skip much of the infrastructure we thought was necessary back then, and live in a kind of 5G mobile internet world.
So we only have a couple of minutes left. So I have a final question, since we have been both spending our adult life in universities. So what are the role of universities to play in the next decade, in particular in terms of academic exchanges and talents development?
Well, I think, universities have an absolutely crucial role. They're the place where people expand their horizons. They're the places where they kind of discover, their passions and what they want to do. They're the place, at least in the way I think of it, in which they discover that there are other people who are different from them but really talented, that they really want to know and stay in touch with over their lives. I think universities, at least in America, are going to probably need to spend more time talking about leadership, what it really means, values and leadership, in addition, not in lieu of our traditional curriculum. But I think, people are in need of having a forum for discussion, in a world like this, fraught as it is, at least from our point of view. What's a way to kind of position yourself as a human being in relation to other human beings? How do you lead? Even if you don't have an exalted position, how do you really add value in your work and your societal context? So I think there's some challenges in the university, and then on the American side, we've got to figure out a way to get to prevent the costs from, to use American slang, going through the roof.
Thank you so much. The time is up. We have to stop here. So nice to have a chat with you. And thank you so much for your insights. Hope to see you in person very soon.
Me too. It's been too long.
Too long.
Thanks, Ying.
Thanks. Bye.
Bye-bye.